In terms of our revenue growth, if you see 9 months of this financial year, we've grown 35% year on year. And if you just were to look at quarter three, over quarter three last year, we have grown 42% in revenues. We have delivered 446.6 crores of revenue in first 9 months. And what is driving that growth? We have a very strong conviction on esports always. We believe that the sports entertainment will get disrupted with more and more youngsters watching live stream on video games, competitive tournaments, their own streamers, influencers watching that. And that esports segment is really kind of driving the growth for us. If you were to kind of look at the overall numbers, it's 75% growth year on year for esports segment. And that's what is really driving, has been the key driver in the revenue business. Nazara has 4 growth levers. And
can you talk about the early learnings which have happened so far? How is the margin trajectory looking from here on? What are the factors at play there?
So again, continuing with the same point of one-time thing, that revenue normalization is coming only in gamified learning segment in Kiddopia, where you're seeing a revenue impact of 6.1 crores one time being done in Q3. If you add back to that, you would really grow a 27% year on year in gamified learning segment also. I know 27% compared to 89% or 75% of esports really looks lesser. And we would like to have it growing 50%, 60%. But just to kind of put in context, it grew 27% year on year on a back of a year where they had grown 8x. We have really looked at gamified learning. If you look at, they've grown 843% in EBITDA margins, which is because of decrease in marketing spends from 9 million odd in first 9 months last year to 7 million this year. And that gap of marketing spend is what you're seeing in EBITDA. And this business is really dependent upon net new subscriber additions into the business. If you see net new subscriber addition is 4% quarter on quarter, which used to be 5 to 6% month on month. And that it is purely driven by marketing spends, and our ability to spend on performance marketing post Apple issues has reduced a little bit, though we have caught up on our spends and our growth of subscribers. And Q2 over Q1, we grew in subscriber. Q3 over Q2, we have grown in subscribers. But the rate of growth will get accelerated as the global ad networks find a solution and a workaround to really work with publishers like us.
You've been quite active as far as the acquisitions activity is concerned. Are there any new targets you have on your radar? What's the thought process on the inorganic route front?
We believe we are riding 2 horses. One is our current portfolio growth, and they continue to kind of drive them and accelerate the momentum which they are already on. And we constantly keep looking at the white spaces in the segments which we operate. And how do we really expand, whether into new geographies or acquire new capabilities, capacities, users, or new growth engines. And we are looking at this kind of an M&A in all of the 4 segments, whether it's esports or whether it's freemium, gamified learning, or real money gaming for skill base. So all 4 areas are important for it. It's not that we are looking in one particular area. And given that structure of Friends of Nazara Network, where downstream subsidiaries have very passionate teams really focusing on their operations and growth, it gives us time, bandwidth to look outside in at corporate to see what are those white spaces and what are those right founding teams which we can really work with them. And that's an ongoing part of us, and we constantly keep looking at those opportunities. We have the balance sheet, very strong balance sheet, and we also have a very attractive track record of creating wealth for founders, their investors in past. And that's what makes it a very a conversation where it's focused on meeting of minds, becoming friends, rather than whether Nazara participation is really going to add value to the founder and investment in their investors.